Good evening, everyone. My name is Anubhav Srivastav, and today I'm here to talk to you about insurance. Um, Last few years, we've seen the importance of insurance coming into our day-to-day lives, especially with the onset of the pandemic and assorted problems that it has brought on us. So today we're going to talk about 5 things that you should know about insurance and 5 things that you should do about insurance. So, without much ado, let's get started on and take off from the union budget, where the Honorable Finance Minister said that all insurance policies that have a premium above 5 lakh rupees will start to attract tax. Earlier on, the proceeds of such insurance policies were not taxed, and now they will be, which does not mean A, that the ATCC limits are gone. They still apply for the old tax regime. Second thing is, should these policies be called in the sense that, let's say, if it's a life insurance policy and the policyholder dies, those benefits will still not be taxed. So it's important to understand that the investment component of these policies will start to get taxed. That's the first thing to know, that you can no longer use large premium insurance policies as investments, because you will basically pay the same amount of tax that you pay for other investments. That's the first thing. The second thing is that you should know is that insurance, by and large, and again, there is research out there from a few media houses, from some important journalists, from people at the Investor Education and Protection Fund of SEBI, etc., which says that insurance policies do not really give you a great return. And that number is somewhere between 2 and 4 to 5%, which is quite abysmal given that inflation is running at 7.5% right now. The reality is that this number is because you only get to enjoy your benefits, the returns, only after you've stopped paying the premium. And you can go and see this on Twitter and a bunch of other places where that is there. Safe to say that the returns are not great. The third thing is that these policies are expensive, and it becomes expensive because there's a crazy amount of premium that is used to pay out commissions. The limit for the first year commission that is paid out to agents is something like 42%, and second year onwards that number is 7.5%. So you can imagine, for 100 rupees that you contribute, 42 rupees goes to paying people out, and therefore the rest is what is making you money. It's hardly surprising that you have low returns that are coming from policies. The fourth bit of it is that policies are quite complicated. Now, the statistics out there, and I'm not just talking about life insurance that can have its own challenges, around 20 something percent of people don't really understand what they're getting when they buy either health insurance or motor insurance. And motor insurance is pretty common. Health insurance may or may not be that common, even though that's been picking up. So that's a huge problem. Education is not there. That means what people are getting, they don't really understand, and what they're being sold is perhaps misselling to an extent. This is again brought out in the survivorship of the 5-year data on survivorship of life insurance policies. That number is also pretty low. Last but not the least, all of this that you get, like literally the insurance which has got bundled investments, you don't really know what it's doing. So there are bonuses that are declared, which there's complicated language that tells you, okay, this is how it needs to happen, and that is how it needs to happen. And so this is a big problem when you have no transparency or low transparency when it comes to bundled insurance policies which have investments in them. So the question is, this is all a problem. What should we do about it? Let's first look at what is our insurance need. So that's the first point. Our insurance need is not just health. We've seen that during the peak COVID era, that you do need health insurance, because if you get into another of those pandemics, you'll have a huge problem just paying for it. So that's the first one, which we've realized. Life insurance has been sold to us to Kingdom Come. So that's again something that we don't really need to know the importance of. However, make bundling it an investment not such a great idea. Of late, just a few days ago, there was a massive earthquake in Turkey where houses are gone, livelihoods are gone, so the assets are gone. So the other important thing that we do need to start to worry a little bit about and take remedial action is to secure your assets. Now, those assets could be a house, it could be the contents of the house. So the house insurance is house insurance. It could come with or separately theft insurance, fire insurance, all of these kind of things. Now, of course, you can't afford all the insurance that you might want, right? Or that you might think you need. Therefore, the next step is to research what all is out there, and also research what are the charges from different companies, or what's the different kind of premiums that you will pay. And there are enough aggregator sites out there that are neutral to specific insurance companies that will tell you, compare side by side, what are you getting, what are you paying for it, and therefore what suits you the best. You might want to consult an advisor, especially not somebody who's going to get a commission, but somebody who's neutral to help you navigate this entire area. The third bit of it is that, we wait for a disaster. Let's not wait for a disaster. Buy anything that you need early. First advantage is that you're covered early on. The second advantage is, let's say you talk about health insurance or life insurance, right? The earlier you buy it, the lower your premium for life. So that's important, right? It's like an early access program that allows you to secure yourself, but also at the same time not pay as much as you would, let's say, if you were to start taking life insurance in your 50s. That would be a terrible idea. The next bit of it is about, which is the fourth point in our discussion, is about documents. Now, let's say you have fire insurance and your policy document is in the fire. You'd have a devil of a time trying to get that document out. So the first thing, and again, the government has been pretty adamant about improving our digital access. So they provide you with facilities like DigiLocker, and there's demat insurance policies and so on. Determine what's good for you. And the IT Act says that anything that is in the DigiLocker, an issued document, is as good as the physical document. So that's one of the big things that you have. You don't really need to worry about the theft of the document, let's say, or the destruction by fire of the documents, or documents getting swept away in floods, or any of those things. Now, these things become very important right now because we are in the midst of climate change, and we've already seen inclement weather that is going to affect us adversely. So the idea is to protect against the losses coming out of climate change, and at the same time make sure that you can actually claim against those losses. Last but not the least, educate your family members about what you're doing. What is the recourse that they have should any unfortunate incident befall people? I mean, Turkey, classic example. COVID, another big example. We can sleep well at night knowing that all of our near dear ones are taken care of should anything go wrong. Secondly, all our legal obligations are also taken care of when we take in appropriate policies. So on that note, I'm going to pause here. Those are your quick 5 to know things and the quick 5 to do things. Should you have any comments? Should you have any questions? Should you have any suggestions? Please do write in the comment below. Do like and subscribe and share the channel with people that you think would benefit from some simplification of our financial lives. Thank you so much, and see you soon.